Ladies and gentlemen, Bitcoin is 1 day and 15 hours away from the weekly candle close. That weekly candle close will be incredibly important as per the weekly chart RSI descending wedge formation, which could see a break to the upside of a downside, looking like we could see a break to the upside. Now, it's not there yet, but if it goes a little bit higher, we'll get there. And we're going to discuss that in tomorrow's video because we've still got time there. It's 1 day and 15 hours. So this time tomorrow, I'll post a video on the weekly chart RSI and on the weekly chart in general, given the fact that weekly candle close is coming in. But today, I don't want to focus on that because that's recapping, right? What I want to focus on actually is a bunch of questions I got on my YouTube AMA. I told you guys to ask me a question about the market and I'd answer your questions in this video. Now, if you go to the timestamps down below, you'll see all the questions I answered and at what part of the video I answered them in, and you can find the questions you find interesting, the questions you want my answers to, and they will be in those allocated timestamps. So go ahead and do that if you're interested. Otherwise, just watch through the whole thing. There's a lot of interesting questions to answer today. I've picked them out. I've handpicked them from what you guys sent in. So it should be very useful. Let's get into it. Just a quick heads up before we do so, guys. I've partnered with two exchanges, BingX and Bitunix. I've handpicked these exchanges myself after trialing them for a certain period of time. I've been advertising both of these exchanges now for over a year, 2 years in the case of BingX. They're both global non-KYC. They've both never been hacked before, and they've both got my referral links down below. If you use those referral links to sign up, you can do it from anywhere in the world, and you will get a 15% trading fee discount for life on every single buy and sell. 15% of the trading fee will be discounted. You won't pay the 15% based on using my referral link to sign up. So go ahead and do that down below. Let's get into the questions straight away here today. All right, first question by Cherny. Are you still confident in a cycle top in February 2025 as opposed to October 2025? Now, there's some things to clarify here and clean this up. I was never confident in a February 2025 top. I did outline a possibility for a top in around February 2025. I believe I said something like February to March or April or something like that. But that was a while ago, right? And the reason why I said that, and this is relevant, I'm going to go into it now. The reason why I said that is because at the time, this was back a few months ago, haven't made these claims for a while, but at the time we had trends on Bitcoin. We had a trend basically where Bitcoin had a very structured level at 67 on the monthly chart RSI. And you can see, if I draw it in there in red, 67 on the monthly chart RSI being a very structured support and resistance zone over time. And also it acted as resistance right here. You can't see it because a candle goes right through it, but there was a structured resistance zone right there where we closed a candle. Another one right here. And basically, if we go ahead and draw in on the price chart levels at the bear market, kind of important bear market zones, what we'll see very clearly is that at the same time Bitcoin was testing that structured resistance level on the monthly chart RSI in red, we were also testing these yellow levels right here on the price chart, meaning that the yellow levels on the price chart that I've just drawn in that divide the bull market from the bear market in many occasions are actually very similar to the structural resistance zones on the price chart RSI. And you can make a case that the structural resistance zones in the price chart RSI, the red level at 67, is the relative level to the levels on the price chart in yellow. Because Bitcoin moves cyclically, these levels are all connected, and you can tell they're connected via the fact that at the same time we're testing resistance with these yellow levels in the price chart, we are testing resistance with the level on the RSI, right? Now, the whole argument was we were going to see a pre-halving correction from a resistance retest of that yellow line and correct downwards as per what we did in the prior two cycles. So in the cycle back here, we rejected from that yellow level. We did the same thing from the red level on the RSI, corrected downwards and then moved upwards after the halving. Same thing in 2019, corrected downwards, moved upwards after the halving. The whole estimation was if that trend was to continue, we would see a rejection downwards from January, okay, and move upwards after the halving and breach all-time highs then. Now, when we didn't do that, when we didn't move upwards after the halving, this trend basically got debunked. Now, the reason why this trend would have led to a prediction of a February top is because we can go a little bit further and we can say that, okay, we can identify date range patterns. So for example, from the time it took to break the red RSI line to the upside to reach the bull market top, it took about 480 days, okay? In this case here, it took about 420 days. In this case here, it took about 360 days. What do you notice about those numbers? 480, 420, 360. Every single data point is minus 60 days. Therefore, in this occurrence, it would take around 300 days from the time of breaking that resistance line, which would bring us to a target 300 days later, of around November. But if we were to break after a correction of 3 months or so, that would bring us to a target of around February 2025. So that was a very long-winded explanation of something that's not actually relevant anymore, but I just wanted to explain where that came from and why it's no longer relevant. It's no longer relevant because the trend through which it was kind of leveraged off to create that prediction is broken, gone, right? So there's no more prediction about a February 2025 top right now. Simply, I mean, this is my view. The prediction very much is we're either top now in March, we already topped, or we're going to top late next year with the 4-year cycle. I don't really see, unless we form something completely new in this period of time from now to the end of next year, I don't see how we could see anything else. It seems like, in my view, that the two scenarios are this was the top and we just didn't know about it and no one really predicted it, or the top will be a regular top within the 4-year cycle. So that's what's happening now. I hope that gave you an adequate explanation there. That was probably a little bit too long, but that's why there's timestamps, right? Next question. Can you please elaborate on Wyckoff and the role of institutions, whales, and market makers in Bitcoin cryptocurrency market? And then he goes on to say, what measures do I personally take to ensure you want one of the many retail traders out there whose stop losses are constantly getting triggered? Okay, so a few points on market manipulation, smart money, market makers, whatever you want to call it. I actually wrote a paragraph in my VIP group about this recently. I'm just going to read it out to you. I think it does a lot to answer these questions here. Institutional manipulation does exist. Market makers do not exist outside of circumstantial situations as a collective entity working together. They do not exist as a collective entity working together. There's no evidence of that whatsoever, okay? There's no evidence that there's this cabal of market makers in whatever country, in whatever place, in a secret office somewhere, working together to collectively manipulate the market and steal all your money. There's just no evidence for that whatsoever, okay? This is from a trader. But what I can say is that liquidation wicks and stop loss hunting, okay, so when you get scammed and when you think there's no way that could have ever happened unless it's manipulation, okay? Liquidation wicks and stop loss hunting are oftentimes natural results of price action, sometimes manipulation, no doubt, but the point is the mechanism for what looks like stop hunting exists without manipulation. Regardless of if the market makers exist as a collective unit of institutions working together or not, TA works even under the assumption that they do, okay? Even under the assumption that market makers exist and are constantly manipulating the market and scamming you for your stop loss, the TA probabilities that we've identified as analysts over years and years and years still hold true, okay? They've been identified over the course of literally millions of trades with millions of the same patterns. So even if market makers are a thing and they're actually manipulating the market, which there's no real evidence of, because the mechanisms for what looks like manipulation are actually involved in regular price action, okay? Domino effect via stop losses being triggered. One singular sell order can cause a spike in a lack of liquidity that can cause the price tumbling down much further than you think it would. That would trigger stop losses, and stop losses trigger stop losses, and it can go all the way down until a point in which there's a compiled level of buyers, and that will be the point in which the price reverses, and that could be exactly where you set your stop loss, and so it looks like you got scammed, but you actually didn't, right? So a lot of this is explainable by regular natural price action. It just really doesn't look like it at the time. Very often, what most would deem to be manipulation is actually just abnormal sentiment leading to irrational price action. That's another thing, as was likely the case throughout the lead up to the ETF release. Too long didn't read. Here's just a summary of what I said just then. Manipulation occurs. It's not always a grand conspiracy of tons of institutions working to take retail's money. Perhaps that occurs occasionally. We can't prove it. We don't really know. But retail actively lose and institutions actively win. So it looks like that may be the case, even though it's not provable. The truth is hard to pin down, but regardless of the truth, trusting TA is your best bet, okay? So I'm just saying, do not act like it is or do not think, let's say, that it's an established thing that these market makers who are organized together to collectively take your money and steal retail's money. Not really how it works. Massive oversimplification, massive assumptions being made there. A lot of what you see and you think is manipulation is explainable by natural price action. Now, how do I avoid being, let's just play along with it for a second. How do I avoid getting trapped? How do I avoid getting my stop losses hunted? You can't really fully avoid it. Sometimes it's just going to happen. But a way you can avoid it, a very good way you can avoid it, is identifying where everyone is setting their stop losses, identifying in the order books where there's massive amount of orders, and setting your orders just under that or just over that. So that if the price hits that level, it's going to eat up all those orders first, and yours is going to be just above it or just below it. And yes, you might get a worse buying price or a worse selling price, but you're going to avoid the potential, or you're going to try and avoid the potential of getting liquidated out of a position, right? So set your orders just above or just below an important level, and that should do a lot to avoid that situation. Narratives that I think will perform better this cycle, assuming we see an altcoin season, of course. What do I think will perform better? What are the categories of altcoins I think will perform well? Well, that's an interesting question, because the performance of a category is not necessarily correlated to the performance of a coin, right? You can have, for example, in the last cycle, you had decentralized finance, DeFi, performing very well, very, very well. But I think you'll find that since the market was performing so well, it introduced a massive amount of coins, new DeFi coins, into the market. And on a generalized scale, if you invested in DeFi, you probably didn't do much better than if you invested in anything else, unless you got one of the big coins that drove most of the performance, okay? Where there is demand, there will be supply. Where there's demand for a certain category of coins, where people are rushing into DeFi left, right, and center, you're going to have thousands of DeFi progress spring up out of nowhere, and it's going to spread the capital out throughout the sector. So I don't necessarily think that investing in sectors as a whole, or believing certain sectors will do better as a whole, really means anything for your portfolio. Now, if I was to guess what sector would do well, regardless of all of that, AI is the big thing now. I truly believe AI will do well. From what we saw throughout October through to February or March, was AI dominating the market. I mean, most AI coins were doing very, very well. And what you saw is that when people recognized this, you saw, just like what I mentioned before, an influx of AI coins into the market, and then they stopped doing so well because the money was spread out too much amongst these coins. But I do think AI as a broad sector in terms of market cap will do extremely well if we do see an altcoin season. That is really the news of the day at the moment. And it probably will be for some time. That's the future, AI revolution. BRC20 has potential as well for a bit of a higher risk category. I believe in that. I've done a video on that before. You can search it up on my channel. Just type up BRC20 Rules of Crypto and it'll probably come up there. But all of this is assuming we see an altcoin season, and that's part of the next question, or one of the next questions. So we'll get into that in a moment. Do I use indicators outside of a charts like Google Trends? I'm going to assume you're thinking about Fear Green Index, all these types of things. Not really. Not really. I don't see them as necessary. Everything I need to know is included in the charts. Like even down to news events, even down to, oh, there's going to be a bill that's passing through the Senate or whatever. All of that is included in the charts, right? Sentiment is an accumulation of everything that's going on. The charts are the key, and everything else is a middleman. If you look at, oh, there's going to be a bill passing through the Senate, and you're watching that instead of watching the patterns forming on the charts, you're ignorant to the reality that the patterns forming on the charts are a reflection of the progress of that bill passing through the Senate, okay? The war in Russia and Ukraine. You can go ahead and look at the results of the war, look at the battles, look what's going on. But at the end of the day, the whole market is consistently on a 24/7 basis reacting to world events, right? The market tells you what the world is doing. The market shows you the sentiment of people, right? For you to go out and develop your own opinions on the global events or whatever, right? And then bring those opinions, your personal opinions, back to the market, right? You're doing this the wrong way, because the market as a whole is smarter than you as an individual. So to an extent, you've got to trust the market. And then you'd say, well, what about when the market tells you the wrong thing? And that's why it's about probabilities, okay? So yes, I'm not saying turn off the news entirely, like collect data from the news, but don't take it too seriously unless you genuinely think, that this is a strong case and you genuinely think everyone else is wrong and the whole market is wrong. Like, that's how confident you have to be. The whole market and the sentiment of the market is wrong, and there's no signs of it on the charts, but I'm correct as an individual. Like, how many circumstances in your lifetime is that going to be true? Very, very few. And guess what? Before the price reverses, all the time, most of the time, unless it's a black swan event, you're going to see signs of reversal before it happens. So unless you think that you have just the greatest accumulation of evidence ever, and your knowledge as an individual is better than the knowledge of the market as a whole, and you're going to avoid a black swan event because there's no TA triggers for it, cool. Then make a decision based on fundamental analysis, or based on Google Trends, or based on the Fear Green Index. Awesome. But how many times is that actually happening in your life? Well, realistically, the last black swan event we saw realistically was COVID. And that was 4 years ago. So how often should you be using this mindset to do analysis? Shouldn't you just be trusting the charts like 90% of the time? That's my whole view on that. Like even down to CPI, even down to FOMC, all of these decisions are predicted by market beforehand. Everything's priced in beforehand. So if it's very likely we're going to see a 50 basis point cut, the market will price that in leading up to the cut. And when the cut actually happens, you won't see much movement. This is just how it goes. The only time you see movement in regards to decisions is when the market can't agree on a sentiment. When 50% of people think it's going to be a cut, 50% of people think it's going to be stagnation, then you see massive movements in the market and uncertainty. And that's maybe when your opinion can matter a bit more because you have to pick a side, right? But when there's clear sentiment, there's no need for any sort of external analysis whatsoever, really, most of the time. When will I rotate my Bitcoin into altcoins? Well, I don't actually have much Bitcoin right now. I really don't. I got rid of a lot of Bitcoin upon the fear accumulating in the market and upon weird stuff going on. So I'm not heavily in Bitcoin. When would I buy more Bitcoin? Well, at the breakout of this RSI pattern, I'd consider, but for the most part, breaking out of the entire macro structure itself would be a buy point for me on Bitcoin. When would I trade that Bitcoin into altcoins? Well, as soon as I see that Bitcoin dominance is crashing downwards, as soon as I see Bitcoin dominance break below this weekly chart RSI yellow triangle and break below this red line right here, potentially go down to this support zone, something like that, form a clear downtrend, right? Then I would consider getting into altcoins again because that would be evidence that we're seeing an altcoin season. Right? As long as Bitcoin dominance is going upwards and as long as Bitcoin itself is not in the clear, there's really no evidence that we're seeing an altcoin season. And so there's no reason to really be getting into altcoins because Bitcoin would still be outperforming them on a generalized scale. And if we're trading market cycles, if we're trading macro investing, we need to be trading generalized scales. So if Bitcoin is outperforming altcoins on a generalized scale, given the fact that you're trading cyclically, you're trading macro, you need to trust that. And you need to not touch altcoins until they are outperforming Bitcoin on a generalized scale. So until that happens, until Bitcoin dominance properly reverses, I will not be interested in altcoins at all. Or let's just say mostly, like I might make small buys, initial buys, small percentage of my portfolio, but I won't be massively converting everything into altcoins until that point. This is an interesting question. What will it take and when will it happen for Bitcoin to become an investment independent of the stock market where the price is no longer following the S&P 500? Very interesting question. The price is not following the S&P 500. Bitcoin and stocks are not connected. They are correlated, but they're not connected, okay? So Bitcoin doesn't go down because the S&P goes down. Bitcoin and the S&P go down because the economy is bad, for example. Bitcoin and the S&P go up because the economy is good. And it looks like they're moving together based on a connection to each other, but they're not actually connected to each other. Look at my hands here. S&P is here, Bitcoin is here. They're both connected to the same thing up here, right? They're not connected to each other, but they're connected to the same thing. So it looks like they're connected when they're really not. Now, for Bitcoin to start moving on its own, to start breaking that correlation from the S&P 500, you'd actually need to see a complete shift in why people invest in cryptocurrency and how they do it and under what circumstances they do it, right? And that is a ridiculously hard situation to predict if it will happen or when it will happen. But what I can say is it would require a massive degree of change in the way the financial markets are working currently, okay? There would have to be, let's say, for example, a massive loss of interest in stocks for some reason, a massive distrust in stocks for some reason. There'd have to be some big catalyst for it to occur. I don't see it happening naturally. There'd have to be a catalyst of some sort. So, a lot of people say that one of Satoshi's original plans for Bitcoin was to be, independent from stocks, etc. I don't know if he was talking about price action. I think he may have just been talking about custody, right? Holding Bitcoin on your own custody in your own wallet, that in itself is a use case. You don't necessarily need Bitcoin to move completely separately from stocks for it to be useful. That's not necessarily the utility. It's great if it would do that, but it's not the utility. Unfortunately, for the most part, all assets move together, right? Even gold. They have correlations. Now, the correlation's weaker with gold. Ideally, we achieve a weak correlation with Bitcoin. Ideally, we get more like a digital gold type thing where it's correlated vaguely to stocks, but not massively. That's becoming more and more true, I think. But in terms of a complete decoupling, doesn't really seem possible unless there's a big catalyst. So we'll see how it goes. And the last question, which you can't see because my camera's blocking it. Why is this bull run so shit? Or is it just a placebo? The bull run is so shit because it's been very different to prior bull runs. And in fact, in certain ways, we haven't even seen a bull run yet. Again, ETFs led the price to move upwards way too fast, way too soon. Probably a couple of other reasons there as well. And now we're seeing extensive consolidation to make up for the time. We moved up too fast too soon. We weren't meant to go that high. We were meant to only breach all-time highs in November this year. It's still September. We're still 2 months ahead of schedule. There's no reason for Bitcoin to have kept going. If we're going to follow a 4-year cycle, we're actually where we need to be pretty much. So yeah, in a way it's been shit because the last 5 months has been shit. But if you're actually zooming out, I mean, we're basically where we need to be price-wise. So it's kind of an illusion of shitness in a way. It's just a boring bull market so far. And what do you mean by bull market, right? Because we're not even really broken all-time highs yet. And we haven't even seen our altcoin season. So a lot of the traditional measurements for bull markets haven't really triggered yet. I suppose this is really the launch pad for a bull market. And the question is, do we launch and take off and follow the 4-year cycle, or do we crash downwards and break it? That's the question right now, guys. Ladies and gentlemen, thank you for watching. Bitunix and BingX are the 2 exchanges, as I mentioned at the start of the video. They're both 15% trading fee discounted with my referral links down below. You can go up and join those exchanges with those referral links to get those discounts. Go ahead and do that if you're interested. Take your pick. We've also got the VIP group on Telegram. I trade altcoins 4 times a week with structured trading plans posted. You're also getting access to a group chat with that membership as well. So trading plans and a group chat, can't go wrong. There's the price right there, and there's the PDF with all of the historical trading results, marking our 78% win rate over the course of 2 years. Very good stuff. And then we have finally the Crypto Academy's Become a Trader 10-unit course, teaching you everything you need to know about trading, everything you need to know about TA, about market psychology, all of these things that are relevant to trading. It's all in the course in PowerPoint format, video format, worksheet format, everything you need's there. Check it out. It's on sale right now. Thank you guys for watching. Hope you enjoyed. I'll catch you soon. Cheers.